All right. Hello, everybody. Welcome back to another episode of Tech Bros. I'm here today with Roy and Tanner. We've got a lot to cover. We had Robinhood earnings last week. It was a hell of a quarter. And so we will be breaking down that quarter and giving our thoughts on the earnings and sort of the future trajectory for earnings that the company laid out based on that quarter. We also had Palantir earnings today. So all three of us covered Palantir earnings. We'll talk a little bit about that towards the end of the stream. And I think there's a couple other stories around NVIDIA and Tesla that we might touch on, but the majority of the stream will definitely kind of focus on Robinhood and what we had. Roy, Tanner, how are you?
Doing great, man. Doing great. Busy. Things are going by fast. It's crazy. Like even going through the names of companies that we haven't even touched on. We didn't even talk about SoFi. Like that felt like forever ago, and we haven't even talked about it on Tech Bros. But for the most part, I think we've kind of done our own damage on that name over the last week. So Hood needs to be talked about. Palantir is a bunch of names. So we'll definitely fill an hour. That's for sure.
NVIDIA had a good earnings too.
Just based on other companies, yeah.
through other companies. Like, dude, it's like every single day.
Yeah,
this, like
Microsoft
CapEx after CapEx, more and more and more. It's not just the large cap either.
Yeah,
I'm going to exit and come back in.
Okay, cool. Yeah, we will try to cover everything today. Thank you all for being here. Again, big week for earnings, and obviously very big week for Robinhood as well, based on some of the results that we got. So I think let's get started with the quarter. So let me just bring up these top line results, and then I want to get everyone's raw opinions, and we'll go into the nitty gritty numbers. But 45% year over year revenue growth. They were $10 million away from putting up $1 billion in revenue for the second time as a public company, which is incredible. EPS up 100% year over year. Total AUC almost 300 billion. Net deposits 13.8 billion. Gold subscribers up 90% year over year. They bought back 3 million shares at 41, and their ARPU is up 34% year over year. The call was incredible. They did it in person. I got to go to New York City and ask them a question. Overall, the analysts were excited after the call. Devin Ryan upgraded them to 130. I think Bank of America today came out at 119. So let's start off with you, Roy. What was your reaction to this quarter?
Yeah, we were going in expecting good earnings, and we have high expectations, and they just beat it pretty much every single time. I think there was only one quarter that we've been covering them where it was the contra revenue where it was a surprise, but everything else, it just very, very strong quarter overall. Very impressive time and time again. Vlad said it best. He said something along the lines of, it's not macro, it's product, it's execution.
Tanner, your raw thoughts on these earnings?
Yeah, I think we were all expecting to go in and ask a question, and only one of us got to ask a question, so that sucked. But that was actually on us. We completely dropped the ball. Yeah, new technology. You would think that us young cats will be able to pick up on it, but
Well, I had the stream muted in front of 14,000 people today for 2 minutes. So I mean, don't feel too bad. Like,
really?
Yeah. For 2 minutes. I was like, oh wait, it's muted, and so yeah.
Well, I will share. Like what happened as far as us not being able to talk is I have no excuse. I just flubbed on the technology. Tanner was just really late raising his hand. And trying to ask the question, but that's Tanner.
That isn't wrong. I did end up raising my hand after they closed the queue. I just didn't. I wanted to try some things, but I didn't want it to reset me in the queue. So in their, I'm not taking full blame. In their thing, they put absolutely no, like they said, here's a list of instructions on how to get on. Not one of them was they just said, put in your unique code. So I was like, okay, this probably enters me into the queue.
Yeah.
And so I didn't want to reset it or fumble it or drop out somehow. So I was like, I'll just sit here and wait. And then I was not hearing my name. And then they said it was over.
Yeah, I was just waiting for Tanner, Roy, and it didn't pop up. And I was like, all right, something had to happen. But
that'll happen. I was like, dude, you have to say currently right now. You have to add on to it. I was like, there's not a chance. They're not going to invite us back if we're just trolling all over the call. So I was like, I'm not going to do it.
Well, that's the thing. I think Vlad now knows what currently right now is, because if he's just seeing all the tweets, he's like seeing people like comment about it. But I don't think he knew that was a thing, but it became a thing now. So
yeah.
All right. So what were your thoughts, Tanner, on the quarter in general?
Good quarter. Great quarter. The stock did not have the reaction that I thought it would, but maybe it was a little bit delayed to today. Good day. So, no, overall, I mean, this is exactly what long-term holding is, in my opinion. We hold on to these stocks and they will appreciate over time. We're seeing a deepening relationship with their customers. More customers are going to gold. I think just like a direct deposit user, which we will actually begin to see, the strongest way to determine whether a customer is going to stay with Robinhood is going to be Robinhood Gold. Seeing a higher attach rate, and that would have been one of my questions that I had too, is what percentage of your new cohorts is going gold? If that continues to climb higher, this is an absolute real winner. And there was a nice shout out for Canada there that I really liked on the quarter, saying they're going to come there soon with their acquisition of WonderFi. Really excited about that. It's just going to be total domination. I'm a big believer in Robinhood over the next, well, today all the way in for the next 5+ years. I don't see another, competitor coming in and changing any of the trajectory with them.
Okay, so let's get into the nitty gritty then of these earnings and go a bit deeper. My thoughts are the same. I mean, this quarter was exceptional, dude. It was one of those quarters where it's like, holy crap. Robinhood's not messing around. They're not messing around. I mean, Tanner was the only one who was close to calling the revenue targets at $1 billion again. And, 11 million away. They almost did $1 billion. And there's a lot of different growth metrics to look at. But as a long-term shareholder, as someone who is not thinking of selling a single share of this company, I have yet to find the reason why, outside of potentially an expensive share price, to even feel compelled to take profits here. Because then what am I going to do with that capital? I have to find another generational company to invest in, and there's not that many of them.
Yeah.
We're going to talk about 2 of them on this stream, but you guys got them both. So I'm either late to one of them or I'm really late to the second one. Like maybe I get in at 450 billion. Like who knows when I jump in, but it's never too late.
We have a good friend of the channel who called me, and he's thinking of getting back in heavily. So we're gonna
Robinhood or Palantir.
Palantir.
Okay. Yeah.
Can I take a guess, and will you say yes if it's the right guess?
I will neither confirm nor deny, but you can guess.
Chris?
No. Chris is like, no, that's never happening.
Well, I can say it may be somebody that you know really well and have seen recently on a stream.
Yes. Chat will find out. I'll probably come on stream in a couple days and give his thesis for coming back in. All right. So the Tanner, how do you not know this yet? Like
I'll just type in the private chat.
You should know this, Tanner. How do you know?
Well, I just assume that everyone that yeah, but what do you mean? That is not what I.
Yeah,
I thought you meant. But I thought he held it.
He did, but
like I didn't know that he dumped it. I was expecting someone that didn't have shares.
Dump it. It's just his covered calls have been kind of screwing him. So
yeah,
it's Steve. Let me just say it's Steve's. It's freaking Steve. Steve's thinking of.
He was in that position. I was
basically the SoFi quarter turned Steve to be bullish again. Just got off the phone with him for an hour. He was like, "Dude, I'm bullish," and I'm like, "All right." So he'll have his article out soon.
It was an insane quarter.
It was an insane quarter. So we'll talk more about it. All right. So let's get into some of these metrics. Top line revenue, 989 million. What surprised me the most was this net interest income, which really did incredible at 357 million. I mean, we haven't seen a jump like that from 290 to 357 in a while. So I guess here's the question. What was your take, Roy, on transaction revenue versus net interest income? And how did you kind of see both of those elements of the quarter playing out?
I mean, yeah, that was the biggest surprise for me. Like, not the transaction stuff, like that we already knew going in, or we were very close. Of course, margin book was very good. So you can see the margin interest right there, a tick up from the previous quarter. But that big outperform was really on securities lending, which I know is not like a massive segment. But when you expect like half of its value and you jump up and you double, I mean, that's quite impressive. And credit cards is there. I mean, they just interest on segregated cash, it's there. They do, and the nice thing about Robinhood too is they do talk about like what it means as far as rate cuts and and how much less or more revenue that you expect in one segment versus the other. But yeah, that securities lending, I'm actually trying to pull up a slide here because I forgot to do this earlier. It used to be a big piece of Robinhood back in the prior bull market, and it really hadn't reaccelerated. Analysts asked a really good question on this too, but that is not an aberration in essence. That is an expectation going forward. And part of that is, as you have more and more assets on their platform, that's one of the factors. There's a lot of harder to borrow stocks in the current environment. And that usually means that you pay a lot more if you're going to borrow them. This is shorting, by the way. This is if you're involved in stock lending, that's what that's for.
Right.
So it sounds like that's actually accelerating, and that they expect that to continue. So that's really impressive.
They did like 54 million in securities lending revenue. That's like a big jump. Like every other quarter, if you guys see right here on the screen, they've done barely above 20 million. So that one metric alone doubled. And and credit card again was up for the fourth consecutive quarter. I mean, they did 114 million in margin. Their margin books at an all-time high. So they really were able to execute strongly.
Looks like it was pretty strong last Q2 though as well, and strong the Q2 before that. So maybe it is.
They only did 23 million in Q2 or Q1.
He's talking about Q2 of
2024.
So there might be some seasonality.
Yeah, but still, it's up 20 million year over year.
No, I agree, but I'm just saying it went from 15 to 34 quarter over quarter, and then it looks like I can't see Q1 of 2023 on that slide. But
I see what you're saying.
Yeah,
it still does look pretty large. I wonder why there would be a little bit of seasonality there, but
actually, if you throw this up, this is from 2021. You guess what's their biggest quarter? Quarter two for securities lending. So
why do people short a lot of stocks in Q2? I guess
I don't know. It doesn't really make any sense. So maybe there's something to it. If you guys know in the comments, put that there. We're always glad to learn. But it's kind of funny looking at these numbers back in the day. It was, though, like this was a meaningful amount of their revenue, even though it only combined for like 30 something million. But
yeah.
I'm just showing like this is what it was. And you look at the assets they have under custody right now, like it's not crazy to think that continues to increase quite nicely.
Right. Okay, cool. So that was net interest revenue. What did you guys think about the OpEx going up? And then Tanner, I'll give this to you first. Your thoughts on the share buybacks they did as well.
Well, we knew that the OpEx was going to go up because of some of their acquisitions as well. I mean, we saw that going into it. And then you said on the share buybacks, I don't even know how they did that. I mean, I guess if you make a company with a bunch of day traders and investors, you're going to time the buybacks on Robinhood stock pretty well. But yeah, $41 looks insane whenever you look at it on the past 3-month basis, or past 4 months, I guess. But yeah, it's just incredible how they were able to determine that was the bottom, and they got it like on the head. So
yeah, for those that are uninitiated, Robinhood bought back their average price of their buybacks last quarter was $42. It's sitting at 106 right now. So a lot of companies, when they do buyback programs, they just do it the boring old style. Well, they have like a period right before and right after earnings that they don't touch buybacks, maybe after major announcements. Other than that, it's just DCA mode, just on autopilot. Robinhood clearly has a bunch of degens that are like, hey, buy the freaking dip. And they bought their own dip. And I love it. It's actually kind of similar, although this one they didn't have as much control in. When FTX went belly up and they had an opportunity to repurchase 11% of their float, they did so at like, what was it, $12 a share?
Yeah. No, $10. They got it at 10. They got 55 million shares at $10. Yeah.
It's ridiculous. So, I mean, I love, well, like the biggest thing is like, you can say, well, they got lucky or whatever. There is an element of that. But like the bigger thing is they are aggressive as a company for product launches. They're aggressive in marketing. They're aggressive in pursuing acquisitions. And they're aggressive as well when it comes to buybacks when they see an opportunity. And how can you not love that as an investor? It doesn't always work, but boy, man, when you're smart and you know what you're doing and you're aggressive.
Did you see the cash held by users, assets under custody?
It's
went up a lot.
Where is it? Let me pull it up right here.
Yeah, it's because I'm heavier in cash than normal. So I'm just
Yeah.
That's all right. It's what, 32 billion?
No, it's 34 billion last quarter. It's now 41.8.
Oh, you're looking at the you're looking at the other metric, not cash sweep. Gotcha. Yeah, I mean, retail smart. They freaking took some profits and they're holding on to cash and they're collecting 4%.
Well, I mean, I don't know. That was at the end of June, so maybe they missed out on the greatest month of.
Fair.
July was a pretty good one.
But we don't have July metrics yet. What if retail started buying heavily in July? I mean, we'll see those.
Dude,
metrics.
the amount of options and futures assets under custody like doubled quarter over quarter. Like
they did 515 million option contracts.
Yeah. And then if that goes into July, I hope retail prints.
So here's the thing about July. So the past 2 months, May and April, were pretty lackluster for net deposits. It was 3.5 billion, which is insane. 3.5 billion in 1 month, but we're now getting used to like 5-6 billion. June or July, they did 6 billion. So they reaccelerated. So they did 14 billion for the quarter. They're on track to get minimum of 10 billion, I would say. August and September does tend to suck for net deposits. So we're going to see what happens. But it looks like July will be a good start to the quarter. And then in terms of buybacks, I just want to say this. I don't think we've seen a company grow this fast and do buybacks at the same time. I remember the Bears, when they initiated the buyback program, they said, oh, this is a red flag. Robinhood should be buying back their stock. And I'm like, no. This is a unicorn. Because if they have the capital to buy back their stock and grow top line 45, 50%, and they get like the lows every time they have bought, their average on $700 million worth of buybacks in the past 18 months is $34. Stock's up 3x. It's very hard to find companies that can do that.
Yeah.
I wanted to. This was the only like thing that is something to monitor that's out there. And you mentioned that there was a couple weaker months as far as customer acquisition. So they grew 750,000 sequentially.
Yeah.
And we know that 540,
520
were from Bitstamp. So this is actually very negligible growth actually for those 2 weaker months when they really didn't have any incentives moving. Is this a concern for either of you guys? And Amit, since you always let other go first, I'll let you go first.
Is it concerning that their users are not growing as aggressively?
Outside of Bitstamp.
So to me, I've made this argument a couple of times, but I like to know the engagement of users more so than the net user numbers itself, because the more people that are actually engaging with the product probably is more monetizable. In general, I think this is where the international expansion is so important. So Singapore is really important. They have 600,000 customers internationally now with tokenization. That's going to be really important. And we'll talk more about this later. But banking, the more I think about it, I think that's going to be one of the most important products they ever launch because it will set up a framework for deposits to be stable and not just at the whims of the market because everyone gets paid every 2 weeks. And that should also further deepen the engagement with the brokerage product. So, I mean, like net users seeing that go up is important, but given they're able to get $150 per user, as long as that ARPU number goes up, maybe it matters a little bit more to me than just the raw user numbers itself.
Bro, banking is huge. People have no idea how much spend and deposits add on to a customer's total average revenue per user, especially if those people can cross-sell even more. Like you'll find new top of funnel customers that whenever they're looking for a new bank will not choose SoFi, will not choose Chime, will end up going to Robinhood first. And then eventually, whenever they have money, start to transition into like the brokerage side. So adding new top of funnel ways that customers get onto the platform, insane. You'll have customers that already are on brokerage that now end up putting more money with their banking product. So you'll end up getting higher average revenue per user. But there is something to highlight about this quarter about mixed results. Like Amit likes to point out monthly active users sometimes was not the greatest quarter for monthly active users, went down quite a bit.
But it's up year over year.
Yes, but what seasonality did we see in Q2 that we weren't supposed to see in Q1 or something?
I mean, I don't know, but if we're looking at this on a year over year basis, then it's up almost 2 million. Like that's not bad growth at all. Or sorry,
well,
up
1 million. But yeah. Yeah, no, I agree with that. And I'm not like, this is why I don't actually care about this statistic. Like I actually choose not to use this because I actually think this was a strong quarter, but it is weird.
I care about the disclosure of this statistic.
No, I get you.
Because if they were to stop disclosing this, or they were to be a company that doesn't tell us how many people actually use the damn thing every month, it makes me wonder, like, what's going on. But
don't be Netflix, right?
Yeah.
This is one of those that's just always healthy to see, and you can see the trend is there anyway.
Starting to normalize.
What's that?
Starting to normalize.
Yeah. Newer cohorts tend to come in a little bit harder. This is the newest one right here. And they add like every single one across the board. These are not assets under custody. These are net deposits. If it was AUK, you'd be like, well, of course it's going to go up. But this is just a great thing to see that, across the board, old customers, new customers, they continue to add. Now, that's one of those reasons why, like, when they don't offer like matching, obviously they're not going to accelerate quite as fast as far as user base. They didn't launch something massive internationally that gets a lot of new users. I think that they should, continue to incentivize because they can do it. So why not be that ACAT positive against everybody? But once they have users, like, it's a sticky base, and users tend to add over time. So the bigger that they get that base, the faster they continue to accumulate, even if they have slower quarters as far as bringing in new users.
Yeah, marketing spend, by the way, quarter over quarter was lower.
How much was it? I didn't see that number. What exactly?
99 million.
How much did we spend in Q1? 120?
105. But it does go to show you that I don't know if they were prioritizing certain expenses, but like their expenses were just generally lower quarter over quarter, and that's pretty exciting. Like research and development was flat. General and administrative was a little bit lower. Operations was a little bit lower. Marketing was a little bit lower. So I don't know. It was an interesting quarter overall. Way higher growth than what we expected. It's just, what is June going to look like? Like, with that unbelievable June month that we ended up seeing, we saw what their margin book looked like. That looked insane. Did you see that, Amit?
Yeah, 9.5 billion. Yeah.
I thought we broke 11.
No. July, right?
Oh, July. Did they disclose July? Oh, yeah, they did. Yeah, 11.
They put it on a tweet.
Yeah, you're right.
And so it went from 9.5 to 11. Bro. Look at that on a freaking like on the chart. It's a breakout month. And then what does that mean, though, for options trading and equities? And
yeah, that's the best thing about the margin book
number. Dude.
That's the best thing about the margin book number, is because people aren't going and doing margin because they're like, oh, I'm going to hold this and collect interest against it, because you're done. Like you failed at math if you do that. They're using it for equities, probably options, futures, like you name it. So it's the best kind of growth right there.
Roy's point is so good, because look, when people take out margin, they're obviously taking out that margin to buy stocks, sell options, whatever it is, things that are very profitable for Robinhood, buy crypto, whatever that may be. So Robinhood makes money on the margin interest, and Robinhood makes money on the transaction revenue. Now, here's the thing. Margin really works in a bull market, because let's say you buy NVIDIA. Let's say you margined NVIDIA at 130. You borrowed 100 grand, bought 700 shares at 130, and now NVIDIA's at 180. Your margin balance goes up. Robinhood gives you more money because you have an asset that is appreciated against the margin that you use to buy it. You're only paid 5% for the margin, 5.2%. NVIDIA's up like 30%. So the spread in the middle, it was a good decision theoretically, even though obviously margin is very risky. And now let's say you buy more NVIDIA. And let's say, given we're in this massive bull market, NVIDIA gets to 250 and you're still on margin. You're paying Robinhood the interest. The AUC is going up. And then Robinhood's giving you more margin because now that 130 went to 250, and then you buy even more Microsoft. And Microsoft like, if we have a bull market led, secular bull market, even though there will be ups and downs over the next 5 years because of AI, margin's going to be one of the most attractive products for Robinhood, and customers are going to be using it a lot to spend. Now, the downside is if we get an epic crash, everyone's going to be selling the crap out of their stocks and margin calls and all that stuff. But if we avoid that, this could be a very big product for them.
I literally, as you were saying it, I never really thought of margin to just buy shares and sell covered calls on them. Yeah. I never really considered that, but that's one way of paying back the interest pretty quickly, eh?
Yeah, because
there was
if the interest is 5% a year and you can make 2% a month,
Yeah.
there was a guy that I met at the Miami Summit for Robinhood that's his strategy. He took on a bunch of margin. Like he owns a lumber mill, so he's doing fine as far as income. But he took on margin and bought. I think it was dividend stocks, but it might have been selling covered calls. I might be misremembering. It's been a little while, but he was like, "Yeah, I make like 6% more." I think he was doing both actually. He was selling covered calls and also racking in a dividend. So yeah, I make like between 5 and 6% more than what the margin rate is on. Cool. But Evan did have a point in the comments. He's like, "Hey, most people lose a lot more money using margin than otherwise." So
yeah.
But if you're going to gamble and be degenerate, I guess do it on Robinhood, cheaper rate.
Yeah, and again, if
Get
you're
your first 1,000 free.
Honestly, I use that 1,000 from time to time. I'm not needing it now. I'm too heavy in cash, but yeah, like I've used it so many times. Like when I'm like, oh, I just need to round out this trade, got 1,000 for free. It's like, why not?
Here's the thing: if you borrow money and then buy 0 DTE options and you lose all your money and you borrowed it, you've got issues, and that's an expensive lesson you will have to learn. But there are very wealthy individuals that I've talked to that borrow money because their cost of capital is 5%. Like the world runs on the cost of capital. The cost of capital is 5%. And when rates come down, the margin rates on Robinhood will go down even more. And if they can buy assets that are going up, especially in April, if you went on margin to buy assets, like there are moments where it makes sense. Now it's not for everybody because you have to understand all the implications of margin call, margin maintenance, etc. But there are very sophisticated investors that can take out margin against their assets. This is really what most wealthy people do. They never sell their NVIDIA. They borrow against it to fund whatever lifestyle they have. And then NVIDIA keeps going up because Jensen keeps executing. And then eventually they'll pay back the margin loan, but not with selling NVIDIA. And if more of those people start doing that on Robin instead of Schwab and Fidelity, where the majority of people are doing it, by the way, Schwab and Fidelity are charging 12% for margin. Robin is charging 5%. It's a really compelling offer over the long term for them to grow that margin book as well.
Amit has richer friends than me, so I never really learned about these kind of things.
You're the friend who told me you go on margin, Tanner. What are you talking about?
I have never once. I'm late and I'm on margin. I'm all the things I'm not.
He just learned about calls, selling covered calls. So just it's
true. Well, I mean, I've known about. I just didn't. I didn't know about them. I didn't know about them.
I mean, you know about them, but you didn't know them. Yeah, you hadn't done. Yeah.
Okay, so here's my question.
That there was a downside that I wasn't realizing.
Yeah, the real downside is that if your stocks go down, the covered call premiums will print, but like obviously you're gonna have to deal with the stocks going down. Here's the question: banking. Tanner, you analyze banks very deeply. New Bank, SoFi. How big do you think this could be for Robinhood?
I don't know. You're putting so much credit on my name that I don't deserve, but I like looking at fintechs for sure. And it could be huge. Like, I mean, it really could be a doubler of their business. And people don't give enough credit to the deposit. Well, I mean, people in banking definitely do, but the deposit industry is huge. The spend industry is huge. Payments is unbelievably huge. They could create a peer-to-peer system that takes away from the Venmos and the Cash Apps. I mean, it's their big piece right now is that they have 26.8 or whatever the number is million customers that they can send a push notification to for free to start to get people to switch over their deposits. That's incredible. Knowing the way that Vlad has run every single new product, he will offer rewards that people don't think can be, positive in terms of profitability for them on a standalone business. They didn't think that whenever they did commission free. They didn't think that for 3%. They didn't think that for the way that they changed the pricing on options. They just continue to execute. They have a really, really great tech stack on the back that makes so then they have low cost to operate. So the way that they've been doing that, I'm very interested to see how they enter banking. I've heard about the perks, but also we've seen what they did with Robinhood Legend. We've seen what they've done with the credit card. They continue to push out new products between when they said they were going to do something and when it actually appeared. So the fact that the beta is what we saw before, I think that the product's going to be very different than what we saw back in March or whenever it was. March, right? When was it? March?
Yeah, it was March 27th. Yeah.
Time's flying, bro.
Dude, tell me about it.
Anyway, It could be huge. And then the cross-sell, the flywheel of having people put their deposits directly into their account, how fast they can then DCA, buy into ETFs, like even easier products that might be beginner products for newer customers. You know, Robinhood is looked at as sort of a degen or active trader platform, but there's a lot of expansion into more passive investors getting on, you know, like Robinhood might want me as a customer, but you know, who's another valuable customer? Someone like my girlfriend, but she doesn't want the products that Robinhood offers today, but she would love high cash back, easy ways to deposit, you know, money into an ETF, stuff like this. Like that stuff would really entice her. And I cannot wait to see that cross section between banking and brokerage.
Yeah, that flywheel is very compelling, and it's differentiated enough now versus like, what was it, 6-9 months ago when they launched the predictions market. Between that and banking, and also credit cards, frankly, although that's a hard to get thing at this point. Even if you're like, I don't care about investing, I'm not going to invest, probably Robinhood will get you over there when you're interested in investing, but they can get you with the bank, the credit card, the predictions market, all very compelling products, like really, really good. Well, I mean, to be fair, we don't know how good banking is until we actually see it, experience the app and everything.
Bro,
but
it's going to be good.
Yeah, I mean, like, this is Robinhood. This isn't like...
This is going to be one of those products that, like, I think it's going to grow faster than strategies. I mean, it's going to be a big product.
It really is.
Are you going to use it as a bank?
The thing is, I have a bit. I mean, yeah, I'll use it for my personal, but most of my money goes to my business account. So unless they bring up business accounts, it's going to be hard for me to actively use it. But a lot of people have, you know, regular 9-to-5 jobs, W-2s, that direct deposit. When that comes to Hoodie, and Robinhood on average is getting $5 billion a month every 30 days from people manually pressing transfer from and it's annoying, right? Like, I know it takes a couple seconds, but it's annoying to have to go in and transfer money. If it just comes right into the app, I feel like this is going to be a game changer for net deposits and seriously lead to a lot of different lending products, mortgages, more investing that people will do if all the money is consolidated in one place.
Yeah, we've seen meaningful acceleration from back in 2023 back to 2024. A lot of that has been the retirement accounts and new products. I'm sure, of course, it doesn't hurt that it's a bull market, but yeah, these numbers could look dismal in like a year or two, just compared to where they're going. And it is like, all deposits are not created equal. Assets under custody is not all created equal. It's the golden goose is the direct deposit, just because it's automatic. You don't have to think about it. For myself, you know, we really do need two banks, and so we're still using Wells Fargo, and I hate them. SoFi, I think, will remain my main bank, but yeah, Robinhood, all the way from my smaller personal account that I just need for a couple little things.
There was a comment about Robinhood as a cash management account right now. What's the difference? The feature set is not even remotely the same. So going to an actual checking and savings account versus what they have today will entice many, many more customers. So I think that there will be a big push there. And I was just going to add one thing to what you were saying. If there was a bear case for Robinhood, it's not banking. I think they're going to do amazing there. And in the United States, I honestly think they'll be one of the largest players. I think what people are underestimating in terms of the difficulty will be going to international.
Yeah.
Localizing products and how they're going to, you know, collect headcount there and make products in other languages and everything is so hard. And I've tracked so many companies that have done so well in their industry, try to go to other markets and just completely fail. So that is an unknown for me still. And I don't mean Canada. Canada is the ones that I'm least worried about. I mean more of the Asian countries and stuff, things where the culture of investing changes dramatically. That is where I'm really interested in seeing their success. Because if they dominate that, then Robinhood's off to the races. I think the only thing that's potentially holding them back from their next leg is proving that they can do this in the UK, in Europe, in Singapore, somewhere. And so far, people can get excited, but I don't think we have proof that there's a success there yet.
Yeah, that's fair. Tokenization does make things, I think, a lot easier, though. So, and they, at least with UK, it feels like a beta program as far as a way to roll out. It's been very slow. I know people have been waiting for the next thing, like options. It was that's launched. Margin it was that's launched. SIPs and ISAs are the two local things that they need, and so I don't know exactly when they launch. I think that they mentioned that there's going to be this year. That's when the launch actually becomes real, and you can actually see what kind of impact it has. I'm hoping that they'll ratchet up marketing spend on that side of the pond and really just go for it in the UK. And that'll be the really interesting thing. So, like, if it works in the UK, it doesn't mean it's going to work every single place where they go, but it's a good indicator that you're able to leap into a completely different segment that is inherently a lot more conservative, thinks about investing in a very different way. And then if you can not only succeed there and do well, but begin to shift that culture, not to degeneracy and gambling on zero DT options and stuff, although that's good for Robinhood, but not good for the most end users. But we've seen that with the United States, that there's a reason why, a lot of retail are involved in options, why actually a lot more of us are participating in equities. It's because Robinhood has caused massive disruption and has allowed us or given us an opportunity to participate in markets that we wouldn't have access to. It would be challenging to, because if you're brand new to the markets and you're investing for the first time, you're like, well, I got $100 to invest. Oh, it's going to cost $5 to go ahead and buy these stocks. You might not do that. Robinhood is like, okay, just do it. Here's some confetti. Back in the day, no longer.
Did you see the tweet from Nick on X today? Nick, I forget his name.
Let me pull that up.
This Week in FinTech host. I thought that was so interesting. So just to preface, this is a very big FinTech enthusiast. He runs a podcast on FinTech. It's a big name in cards. Like he has a wide range of different companies that he could work with. But instead, he ends up stopping working with Chase Sapphire Reserve, which is a legendary card. Okay. And ends up, in the meantime, in the interim, working or using the Robinhood Gold card to get 3% cash back. And my hope is that he won't find another card, because 3% cash back and the great tech that comes with it is just so unbelievably easy.
And he said Chase is sending him gifts to keep him.
Yeah, because I think it's like an $800 a year.
Dude, there's a level of wealth where the general manager of Chase Sapphire will send you a freaking Apple AirTag to keep you. Like, what? That is insane, bro.
This is not even a high. This is more like a midterm. Like, this is not MX Black or something like this. This is just I think it's $800 a year.
Yeah,
but
that's crazy.
Robinhood's in the comments of that saying, "Hey Nick, like, what else should we add to make this your daily driver?"
Wait, Robinhood commented on that?
Vlad did. If you go back,
he interviewed Vlad a couple weeks ago. So.
Wow. I mean,
and then his cons were honestly very real. I completely agree with him. This is kind of bullcrap. If this is what Vlad's doing, transactions stay pending for too long.
That is fair.
That sucks.
They do stay pending.
And then his second con was hard to understand my current balance because pending transactions take too long. So if they just solve that, they're off to the races.
Yeah, and credit limit. That's a common complaint for the big spenders.
Okay,
for me, 10,000 is plenty, but.
So here's the thing. Do you think they're going to be profitable on this card? They have 3 million on the wait list, 300,000. They've upped it from 200,000. My take real quick is, honestly, even if they're not profitable, I think it's the best Trojan horse to get people into the ecosystem. But do you guys think they can actually make this profitable long term?
I don't know.
Maybe.
I think all of us think it's going to be really hard.
3%, dude. You already see them kind of fooling around with the rates. You know, it'll be
what Tanner's talking about. It's 3% if you deposit it back to your brokerage. It's 2.1% if you actually get the cash. So,
but if you pay off
your statement balance,
you can put it in your brokerage and then withdraw it. No problem. You get the 3%. But what we were saying is most credit cards that give like a 2% cash back or whatever, you can do that directly in the statement balance, and it's 2% no matter which way you do it. Now, if you exchange it for like some gift cards or something stupid, you're getting less. That's every card. This is a little bit unique for Robinhood. I mean, there's probably other cards out there too, but yeah, I mean, like they'll do what they can to try to keep it they actually even make it profitable. But I don't know.
I don't
I
think it needs
wouldn't
to be
bet against
profitable.
them, but
I don't think it needs
it's
to.
hard. It's hard.
Are we getting in on the S&P 500 on Thursday?
Okay, so there's a Barron's article going viral that Paramount's going to be acquired by Skydance on Friday. So that opens up a spot because Paramount's in the S&P. But I don't know if that actually closes on Friday, and I don't know if that means they're out of the S&P on Friday once they get acquired.
The moment that the acquisition, so is that acquisition already announced? And
The regulators confirmed it, all that stuff.
The day
So
it's
the
finalized
moment-
is when they get out.
Yeah, exactly. The moment it actually goes through and it's finalized, that's when they announce the next one.
Okay, so then this Friday, I mean, we should have a spot that opens up.
And I won't be mad if it's App 11. That's fine. But Robinhood, come on.
App 11 is the only stock they can pick that won't make me actually bang my head against the wall. If they pick some unknown random after those earnings, I'm calling Illuminati conspiracy on this S&P 500 thing.
I mean, it could be IBKR too. Like Robinhood deserves it
Dude,
more.
why should
IBKR,
IBKR be in the S&P 500?
they're big.
They like stability.
No, but what's so cool about IBK? Bro, it's like
If
we're talking
Robinhood,
about
didn't
Robinhood
exist-
here.
if Robinhood did not exist, it'd be like, this is a great platform. It's really good.
Like, I wouldn't be upset if they pick IBKR or App 11, but like Robinhood deserves this. We know they deserve this. Like, we're talking about
I
top
actually-
500 companies in the country. Robinhood's there.
So what I think that they should actually do is give Williams Sonoma a second spot. It's unconventional.
Williams Sonoma had a huge upgrade or thing. They just started working with a firm here in Canada, so that's going to change the whole story.
Dude, they don't even have eligibility with their market cap anymore.
I think they do now.
Oh yeah, now they do. They were up 7%.
25.
Okay,
Yeah.
so they're $3 billion above the eligible.
It would be funny if it goes on this colossal tear and it like doubles in the next. Okay, I was wrong. I'm an idiot.
Palantir of coffee machines.
Yeah, exactly.
Studies every bean, knows how to grind it.
600 PE, something like that. Just like, okay.
All right, so I guess final takes on. Well, let's end with this question: why did the stock not go up?
Well, I think most of those transaction numbers were already known, so it wasn't like there was a surprise still, but the stock price had also appreciated dramatically. And the other thing that I think is I'm not concerned about this personally, but it is something like worth paying attention to and not completely disregarding what other people are saying. The comps right now are pretty easy. Quarter four, they had this tremendous quarter, and you can see like from quarter four sequentially they increased from quarter one to quarter two, but they've not topped that. Now, That's not a problem for me. This is a business that will have quarters like that. It'll have really weak quarters as well, just because the nature of this. They have a diversified product or more diversified income, but it is very much based on the markets and activity. So you're always going to have lumpiness. It's not like Palantir, SoFi, where you can just, it's going to keep going up every single quarter. But I'm guessing that this is at least part of it, in addition to that massive run and knowing most of the numbers going in.
We have one more good quarter of great comps, and then it gets hard.
Yeah.
Then the competition gets hard. But you know what's crazy about Robinhood? They're sitting on $4 billion in cash still. It's crazy. And margins are improving. Like, I don't know. They can accelerate growth with new acquisitions, and they can continue on that train as those previous acquisitions get more ingrained with the system, and they don't have to sort of babysit them too much.
Yeah, and dude, at this point next year, they're going to have to do more than $1 billion every quarter, like significantly more, to have the same type of growth that we're seeing in these quarters. And I don't think anyone expects them to grow 50% next year, but even 25% is going to be some big boy numbers. So that's going to require a lot of diversification of the business. I think that's why banking is really important, but also maybe that $4 billion, they got to start buying even more companies to keep expanding, right?
I mean, that's the coolest thing is they're buying back their stock to make it so that there's no dilution at all. They're acquiring companies and marketing aggressively, and their cash really isn't going down much. Like, it's barely touching it. Fixed operating expenses helps immensely. cost control. Like they're doing more with less as far as employees, and just it's an excellently run unicorn.
I'm super. If I could ask Vlad some questions, it would be on what they think is going to happen with headcount as they expand internationally, and how they plan on localizing. I saw some dumb comment in the chat. I'm sorry, but like they said, Singapore speaks English.
That sounds like something I would say, bro. That's
Dude, I get it. Okay. But
no, you have a valid concern, dude. Who knows if they're actually going to work in Singapore? Like, what if the Singaporeans don't want to use Robinhood? Like you never know until you get in there, and it's not easy to culturally adapt. I mean, Uber, they tried to win in Southeast Asia. They got their ass kicked. They had to sell off the business because they couldn't.
Yeah,
succeed.
Happens all the time. Amazon in South America. Amazon is losing to Mercado Libre. They're so low. Like people just understand it better. And then C Money tried to go over to Latin America, just got killed by Nubank, Mercado Pago, and all.
Really, C Limited tried to go to Latin America.
Yeah, oh yeah, they got kicked out in like 18 months.
I did not know that.
Fast grower, and they just got dominated.
I don't know though. Like if Robinhood stumbles internationally somewhere, I think it probably would be the UK, just because they invest and think about investing very differently. Singapore is a lot more like us, so. And there are a lot of, very good. Well, from what I understand, I've only the only one I've experienced is Moomoo over there, but of brokers out there. So there's a lot of competition, but I think it works to have something like Robinhood that is easy to use. It's intuitive. It's a great platform. There's lots of incentives, lots of features as well, and they can scale it out, I think, a little bit faster than what the launch was there for the UK. Plus, they already have the USDG. Already has, can't remember what certification it is in Singapore, but they already have that. They're ready to go. So,
yeah.
All right. Well,
I read something that secretly said that there is no hold time for S&P 500 to hold above the market cap. That the day that they're above, they're eligible. I didn't know that was true. I thought you had to be up above for 90 days.
No,
that's the case. I guess SoFi's eligible. Oh,
yeah.
Let me ask a question to both of you. You guys ready? Who had a better quarter, Robinhood or SoFi?
SoFi. It's not even a question.
Yeah, it's SoFi.
I don't know if I agree, but okay.
It was
not.
I think it is.
You can find things.
Not even a question is a little aggressive.
You can find things to dislike in Robinhood's quarter. You can't find things to dislike in SoFi. So
what do you not like in
100% success rate?
What is there to dislike in Robinhood's quarter?
The user
member growth.
Yeah.
Why are you so upset?
Maybe
We've been having
churn.
this conversation since it was $6. Where member
It's
count
not a big deal. Like it's tiny, but like what he's saying is right. Like you look at SoFi's quarter, it's you are stretching it to find something. I did a video like going through the three fintechs: PayPal, Robinhood, and SoFi, and I did it from solid, decent, actually pretty good quarter for PayPal. You wouldn't know it from the stock price, but and so I was like, yeah, here's all these good things. Here's one that's really not good at all. Robinhood, it was on the user growth that I said was a not good thing, and here's all these amazing things. And then SoFi, I was like, I got to figure out something that's at least not overwhelmingly bullish. So it's like, well, here's one little thing to pay attention to. I don't even remember what it is right now. That's how small it was. But I was like, I can't just be like A+. They can't do anything better at all ever. Period. But it was just about that quarter. It was so good. The only negative was their silly timing of that capital raise. I think that was dumb.
Well, I will agree. SoFi had an amazing quarter. I don't see any red flags either. But I don't think it's objectively better than Robinhood. They're both up there, but I can't find any red flags in Hood, and I can't find any red flags in SoFi either. That's why I asked the question.
There's only one company I track that had a better quarter than SoFi measurably, and also Robinhood.
Palantir.
Okay, nice little segue. Roll. Actually, Tanner, because Tanner, I saw you streaming the call, so you were covering it, and you were going through the motions of dealing with the numbers. What was, as someone who's not in Palantir, your reaction to this quarter?
Dude, I mean, they're a perfect business. Like, I get it. Like, I do see it. It's just, expensive, right? And I don't even think anyone is denying that these days. But yeah, if they just continue to grow the rate at which their growth rates are growing at, then you can kind of put whatever price you want on it if people are modeling that this is going to be at 55% year over year next quarter, and even higher the next. Like if the bulls are saying this gets up to 60, 70% year over year at higher and higher margins, and the rule of 40 is going to get, above 120%, then, this is maybe a fair price to pay into the future. But, yeah, Alex Karp has got to be the most infectious person to listen to. I don't think I've ever smiled and laughed at a quarter as much as I did. He is just genuinely funny and well running a very, very successful software company. It was interesting to listen to as a person that hasn't really followed the company in a while.
Yeah, I was really kind of in a hard place because it's like, okay, HIMS and Palantir both report bigger position. Palantir, much more confidence in Palantir. I was certain it was going to be great earnings, although I didn't expect this great. HIMS, I was like, this is their most important earnings since they've been a public company. I'm going to go follow that one, even though I was like, I don't know that it's going to be good. And it wasn't. It wasn't good. It was okay. And the whole time, not the whole time, but before the call started for HIMS, I'm like looking at the numbers. I'm like, these can't be real. And I have high expectations, and my goodness, so the craziest thing to me is the top line revenue growth is ridiculous, but a lot of times companies will do that. They'll, maybe not at this scale, of this company size. Most companies that are growing, that they're putting up $4 billion of revenue, are not growing nearly 50% year over year. They're not. It's almost impossible. It's a very select club. But to do that and actually improve on already ridiculous margins consistently, and also talk about not ramping up hiring count, but it's the other direction. They're like, we want to do more with less. It's like, this is ridiculous. There is one single blemish on the entire Palantir earnings, and I'm not even going to share what it is. Amit can if he wants to, but it's the strongest quarter I've ever seen of any company that I've been in at the time. I'm not saying this tops what NVIDIA did initially in that beginning of run, but I wasn't in NVIDIA then. And I'm just blown away to the extent that I haven't bought Palantir in a long time. I bought more Palantir tonight, and I'm going to start DCAing at the all-time high. At ridiculous price to earnings, I don't care. I want more.
Yeah, I'm probably buying 100 shares tomorrow morning. I feel the blemish though was the international growth, because I'll agree that was international growth is horrible. But Arnie made a good point. I feel like it's a problem with Europe. It's not a problem with Palantir. And eventually, when Europe gets their act together and stops thinking that they're living in 1845. That type of growth is going to be very exciting for Palantir as well.
So
localization's a real hard task.
No, it's not. It's a cultural problem, bro. Europe is not. They don't get
that
AI.
is localization. That's what that means.
No, but I'm just saying. But it's not like Palantir can't succeed in Europe. It's European regulators are regulating the shit out of AI.
No, but I'm also saying that maybe Robinhood won't do well internationally because they don't like buying stocks. It's not even Robinhood's fault. It's just a cultural thing that they don't buy. Yeah,
that's fair. That's possible. But I'm saying that your Asian regulators are not saying you can't buy stocks. European regulators are saying they banned Coinbase's ad in the UK.
Yeah.
Did you guys see that shit? I found out today. I was like, they banned a crypto ad in the UK.
That's why I know UK and EU are broken up, but that's why it was so shocking that Robinhood did the tokenization of the private equities over there first. I'm like, okay, SEC, come on.
Europe's actually been way friendlier to crypto, ironically.
Yeah,
AI.
But I don't think because of the culture, they'll have any problem in Singapore. I don't know that they'll dominate. They'll take do what they did here in the United States, but UK is one of those where I'm like, we'll see. I think they'll be fine, but will they thrive? Will they change that culture? I don't know. With Palantir, how? So we've seen them basically. They're growing 100% year over year U.S. commercial growth. You look at the customer count; it's ramping up to the extent that they can't really keep up. They're being very selective now with people, which is like a great position that you're in. Like you just have like this ridiculous moat. Alex Karp said, and correct me if I'm wrong on this, Amit. I believe he said, or Tanner, that they were planning to grow a 10x in revenue in 5 years in U.S. commercial. Is that what he had said?
Yes. Yeah.
So at what point does this actually alter, like not just like a little bit incrementally, but alter fundamentally the GDP and also the future story of the United States of America? Like,
I mean, dude, if they're going to 10x US commercial revenues, and some of these, we'll dig deeper into it over the week, but like there was some stuff where on the call, they were like, a hospital used us for a week. And then a month later, they signed an $88 million deal. Like, you imagine all the hospitals in the country that could use AI. And Sham, the CTO, did a really good job talking about how it seems like this is kind of the new idea they're trying to get out there. AI as a enhancer for human agency versus a replacer for humans. And that's going to be looked at very positively by the government and all across the world, because you don't want to take away jobs. You want to make them better with AI. GDP growth should be pretty significant as a result of that.
And I think it'll take some time, but like if 5 years, like this happens, that they're doing, because it's not just about the spend. Like there's a reason why the growth is ramping that way. It's not people buying stupid AI stuff that doesn't really work and they find out a few years later. They find out in days, sometimes weeks, sometimes months, in rare instances, the ridiculous value of Palantir and what it does for their entire business. And so I think in 5 years, like if it really does do a 10x in US commercial revenue, like that's going to be the story right there. Is like not that Palantir alone saved America, but like I'm just saying that there's more legs to this story. Like when he said that, and also this, I love this, but when he said that 10x in US commercial over the next 5 years, I'm like, I'd already been thinking about this a year or two ago as like, I think Palantir is going to radically alter US GDP, and it's going to be a part of this story, along with this whole AI wave of basically the new roaring 20s that we're in the started a little bit later than the 1920s, and hopefully we don't have the 1929 crash or 2029 crash. But I mean, Palantir is a significant part of that story. NVIDIA too, but I mean, like just what they're doing with all these companies, and you look at these AIP cons that they're doing, like the testimonials. It's free advertising again and again and again. The haters are free advertising. The skeptics are free advertising. It just, they're such a strong company. I'm like, okay, the price looks stupid right now, but I don't care. I want more. I'm just going to DCA, not going to care about the price. I'm not going to buy like a crazy amount of shares, maybe like 5 shares a week. Just keep that up. And I don't think I'm going to regret that in 5 to 10 years.
Tanner, what was your reaction when you saw this quote to CNBC?
I mean, classic Karp. Like, I expected it, I guess, to some degree. I mean, he loves crapping on the haters. Like he said it multiple times in the earnings call.
This was the first earnings call you've really watched, right? Of Karp being
No,
Karp.
I mean, I've probably listened to, I don't know, all of them. Maybe I've missed a few, but like I listened to the last one, probably the one before that. I haven't streamed them before, but yeah.
So you buying?
Not buying, expensive. I like a little deal. Zach in chat kind of has me pinned. I mean, I would like a deal, you know. If we drop down to 75, I'd be a buyer.
Okay. Yeah, I was going to ask you.
But
and 75 is still like, you look at the P, it's like, this is stupid and ridiculous. And who would pay for this company? A lot of people.
yeah,
Dude, if it dips to even 140, the amount of people that like Steve and I have been we've been talking all weekend about this. There's a great podcast by the Compound and Friends, and one of the head Morgan Stanley guys who now runs his own firm, Adam Parker, he's basically making the argument that valuation doesn't matter anymore. Now, not literally valuation doesn't matter, but rather if this AI revolution is as big as we think, you cannot obsess about price of sales and PE as the basis for making an investment. And
I agree with you. But even if that's the case, there's still better buys.
Sure.
To do multiple. Like I'd still be a wanter of more NVIDIA shares. I mean, look at the one company that's above Palantir on both metrics. I mean, if we're buying just the quality of if we're buying the cream of the crop, like that's the one I want.
That's fair.
We've got a lot
of that for NVIDIA.
Yeah, this, by the way, guys, if you didn't see it, Rule of 40, top 25 market cap companies globally. Yeah, NVIDIA and then
Palantir put
Palantir.
that in the deck. I didn't even see that.
Yeah,
Yeah, it's
I
really
love
cool.
this, and I'm sure you saw this one up here. The Rule of 40 enterprise software companies
Yeah,
with
I
1
saw that
billion
one.
more or more in revenue. I mean, like nobody is close. Like if you're following sports, this is like where you're like, hey, these are all amazing all-star athletes, and here's freaking Michael Jordan or LeBron James in his prime, or throw in whoever in there.
The only problem with the top 25 market cap companies globally is look at a bunch of slide decks of the top 25 companies. Maybe valuation doesn't matter, but just look at revenue, net income, any of these things. Once you put them, it would be like all of them at the top, and then Palantir would be on the opposite side of that chart. They would be at the very, very bottom corner.
But the growth rate, Palantir would be ahead of all of them. So the question is, can they sustain the growth? That is the number one question the next decade.
Yes. Yeah, they absolutely.
I think they can. And if they do.
After seeing this quarter, I'm less mad at the valuation than before. I mean, this does feel more like buying Microsoft before it was Microsoft. It's just in 1998, 1996, would you want to have paid $400 billion for Microsoft? I mean, that's the problem. It's just, I think the market's very certain that this is going to be one of the biggest companies in the world. It's just how forward do you what are you willing to pay today to make sure that you have allocation to one of the most successful companies into the future? And then how do you go to bed as at being Alex Karp every day, knowing that that's the position that you're in?
Yeah.
That's also what I think about. It's like, man, you are holding, there's never been a bigger golden goose egg, and you just gotta not fuck it up.
Could you throw this up, please, Amit? Yeah, this right here, is telling. U.S. commercial remaining deal value grew 145% year over year and 20% year over quarter to $2.8 billion. Highest ever U.S. commercial total contract value of $843 million, 222% year over year. That's pretty good for a small cap, but this is not a small cap. Highest ever quarter of total contract value of $2.3 billion, up 140% year over year. And net dollar retention, I believe, was 126. Was 128? They're just top, bottom line, everything except for international. That's the one thing. It's ridiculous growth. Their guidance, if Palantir just came out of the blue and they hadn't been growing like this and they posted that guidance, people would be laughing at them and saying it's a scam. They're just trying to pump their stock. No, they sandbagged. This is sandbag guidance.
Yeah. Dude, I was saying this on the earnings call, but I think all of us that have been part of the Palantir ecosystem, Roy, myself, Arnie, Amir, Matt, all these guys, we've all been humbled because we were bullish, but we tried to be reasonable. And at $6, we're like, look, could it get to 100 one day? Sure. But when that happens, we'll all meet in Vegas because it's going to be this big event and maybe it'll happen 2034. The company and their SEC filings didn't expect to get to $70 until 2029 based on where they had stock awards. We got there in 2.5 years. And so then the question becomes, all right, is it a bullshit meme stock that's hyped up that is artificially got into a $400 billion market cap because there's nothing really there? Or is there something so substantial that the market's willing to pay such an unbelievable, incredible premium for that eventually will allow Palantir to grow into that valuation and it doesn't have to come all the way back down like most meme stocks do? And it seems like it's the latter. And as a result, all of us that were bullish didn't know we were supposed to be this bullish because we didn't expect Palantir to execute this well, but they are. And as a result, it seems like that's going to only continue in the future.
I'm hoping for a DeepSeek type moment now. Something to scare the market into assuming that the product is can be taken away by some younger, smaller competitor. And then the stock sells down to $100 and then the real believers come out.
We had that last week with that. Well, we've had it a couple of times this year, although it's not really moved.
Yeah, but those were tiny. I mean, big ones.
Well, no, there was a rumor that came out that seems like it's substantive somewhat anyway, that the United States government was tasking Microsoft and OpenAI to try to figure out a way to remove Palantir or not remove Palantir, but offload
Reduce
from
reliance.
Palantir. Yeah. And for me, actually, I was like, dude, this is freaking bullish. Because you look at the actual contract value that United States government has with Palantir. It's a lot for Palantir, but from their perspective, it's like, I mean, they're barely breaking top 100 as far as spend.
It's the same thing whenever you see every single company go, oh, you know what? We need to reduce reliance on NVIDIA and we're making all this custom ASICs and everything. It's like, okay, well, it's so clearly they're the dominant force, and the companies that have not been buying enough NVIDIA have been slowing. I'm talking to you, AWS. If you would stop worrying about your own freaking terrible chips and start buying more NVIDIA, you'd actually be able to keep up with demand. But instead, the whole market sold you off because you didn't talk to Jensen enough.
Yeah. Oh, by the way, thank you, Cal Thomas. Good journalist, by the way. If you're the same person, that's really cool. But I think the doubters is the opportunity for alpha. Yeah. Thank you for the donation too.
By the way, for someone, real quick, Matthew, thanks for the $5. Do they still only have 800 customers? Yes, 850 customers. So they're doing $4 billion on 850 customers, which is incredible.
Yes, and then, they're like the largest customers in the world, though.
No, but Tanner, you got to admit, dude, like 850 customers, 4.5 billion. If that doesn't scream moat, I don't know what does. And that 800 will be 8,000 one day.
Yeah, no, I do think that they are.
Also, see, the problem with your question or your retort against my statement is you're not asking why did they get the largest companies in the world to be their customers.
No, but saying only 850 customers makes it seem like you can just go from 800 to 100,000 and that's going to 1,000x the revenue. But that's probably not true because
that's not the implication. The implication is they're doing this much revenue on 800 customers because those 800 customers cannot live without Palantir and they're willing to pay 20, 30 million a year.
No, I agree, but I don't think that it's scalable in the way that if you look at the amount of businesses and then multiply.
Yeah, but no one's saying that. No one's saying that.
Yeah.
Well, I hope not.
Yeah, it's scalable. Like they're moving down market is what's happening. AIP allowed them to do that. Boot camps allowed them to do that. Alex Karp, or I don't know if it's Karp, one of the Palantir folks had a great comment in the earnings call about these employees at other businesses and places that love Palantir, and then they move over to a new company, like every 2 or 3 years, and they're like, dude, why aren't you guys using Palantir? And they bring it over. Or they're like myself at the university I was working with, or I pitched Palantir, and they were like, we're going to go with Zamobot from Microsoft. And I'm like, so they did. And I'm not in the tech world. I'm not, in that space. I'm in a business that we could, I guess, use Palantir, but it's not like, you guys know what I do. It'd be weird. Although there is a partner that Palantir has that I guess does relate. But most of the time, like when you move, you're like, dude, Palantir is amazing. You move to another company and culture, you're like, I couldn't use it. They have it. You get super excited, or they don't even have it. Like, how have you guys not heard of Palantir? So the employees, the users, even in some cases, the investors actually become the sales team. Like, that's ridiculous. And competitors too. Like, that's the other big thing is you look at like an app like Quarter App, and you look for notifications of Palantir mentions. It is the highest of any quarter that I've seen by far. I think I'll have to look. I don't know if I'll have time, but I'd love to look. It wouldn't surprise me if there's more mentions of Palantir by companies, not like number of mentions, but number of companies mentioning Palantir in their earnings call. Some are competitors, some are users, some are just talking because it's like a great company. I think they have more mentions here than perhaps the other previous 3 quarters combined. It's really accelerated. This has captured the attention of not only the market. If it's just the market, I'd be like, yeah, it's a bubble. It's expensive, but man, it's expensive. A lot of that's justified. Maybe
the
all
hope
of it.
is that I guess one day, instead of saying AI on an earnings call, that makes it go up. You say Palantir, and then people assume that you're going to have increased growth rates and that you're sandbagging on guidance. That could be a real future.
It is. It's happening now.
For those in the chat asking to bring on Steve, because he'll bring some bearishness to this conversation. I was on the phone with Steve for an hour before this. He hasn't put out his article yet. He's going to write it over the next couple of days. I've never seen him get this bullish on Palantir. It's been almost 2 years.
How much more bearish can I be?
No, we're not saying you're bearish. We're just saying like in general.
No, I'm saying like You need another bear. I'm not a shareholder. I didn't buy after this quarter. It's a phenomenal quarter. You can't escape the truth. It's an unbelievable, like, you don't need someone to come in here and say lies. It's an unbelievable quarter.
But see, that's why I like Steve, because Steve is not ideological. And when Steve pivoted on SoFi, Steve's been kind of crapping on SoFi for the past 5 months. When Noda put up 44% revenue growth, Steve's out here saying, hey, the dilution's not even that big of a deal. He's defending it, because once he sees the pivot, he gets rid of his emotions and he just focuses on the numbers. And we were talking through the numbers. Like, the numbers are really good and they're only getting better. As Roy said, they're likely sandbagged. We're going to see a 50% growth quarter. And it's hard for Steve to be bearish about that. So I have not seen the bear case in this quarter outside of international growth. I'm very curious to see what the analysts say. By the way, Citibank just got the notification. He upgraded Palantir from 115 to 158 after this quarter. He still has a hold, not a buy. But we're going to see a lot of this over the coming weeks. And it's going to be hard for people to be bearish. Yeah.
Hard to take away anything other than bullishness from that quarter. I mean, there will be a flurry of upgrades.
So they're guiding for the full year of north of $4 billion. I mean, look at this. These are the annual amounts. They've doubled. They're essentially doubling from 2023. Like, it's crazy. Crazy. There are companies that can do that over 2 years, but it's very few when you're talking about billions of dollars where you can do that over a 2-year span.
Okay, real quick, let's end it out on Microsoft and Meta. I mean, the numbers they put up, we all reacted to it live. Tanner, you think AI is real with those two?
Very much so.
Those quarters were insanity. Like, insanity. Absolute craziness.
Yeah. Dude, they got me so... It's like whenever you start playing with a dog, you really get it. I was going nuts, and then going into Amazon's call, I was like, what the heck? It's like I ran into a wall. But Azure was insane. The level of growth that they're able to show off on Azure, the amount of just capacity that they're able to deploy is insane. I cannot wait to see NVIDIA's earnings. I mean, if Azure puts up that, then we're very happy. But
dude, NVIDIA's going to the moon. Like, it's actually going to be on the moon. Like, we will need to get on a SpaceX shuttle to go see NVIDIA. Like, it's going to be there on the
moon. But I really do think that's a real truth. I think Sundar Pichai talked to Elon a while back, talking about putting data centers in space. I really do think we're going to see that in our lifetime.
I am just very thankful that Tanner and Steve in particular, when NVIDIA had its DeepSeek moment, just kept saying, stop freaking out, buy NVIDIA. They didn't literally say buy NVIDIA because they can't, legally, but they basically said, stop being a bitch and buy some NVIDIA. And that worked out.
Yeah, when Gary Tan said it, basically, like I was like, I'm sold. Like, my friends have already said it. Somebody else, good enough. So thank you for pounding the table on that. This, by the way, is NVIDIA's earnings. Not really. I mean, it's Fiscal AI, great product, right, Tanner?
Love it.
But this is the CapEx expenditure. By the way, Evan said that Apple had the best quarter. I know he's joking, but
yeah.
But Apple did have a good quarter, though. Let's not forget, Apple crushed by $5 billion on revenues.
Yeah.
It was good.
All the quarters were good. Like, even Amazon, which I know sold off some on earnings, whatever. But yeah, this right here is telling the direction. Not just NVIDIA. They're not the only beneficiary. ASML, of course, benefits. SMCI, AMD, but NVIDIA. Like, it's just obvious. So thank you for pounding the table, Tanner.
It was such a good. No, we're giving you the credit, because if I had picked any other Mag 7, my portfolio year to date would not look like it's looking. And so NVIDIA was the one that I said, all right, I'm trusting Tanner. Obviously, I did my own due diligence after you got me interested.
Yeah.
You got me to really look at it.
I mean, honestly, you wouldn't have bought it if you didn't see the case. Like, NVIDIA showed you the numbers.
Yeah, but sometimes you need that friend to give you a little kick in the ass and say, dude, like, seriously, trust me on this and look at it.
I mean, I needed that with Robinhood too. Like, Robinhood, when it IPO'd, I'm like, no, this is way too hot. This is dumb. I'm not going to get in. And then it was Arnie. It was, he didn't pound the table so much. Like, he's not a pound. Well, he sometimes does, but he got me to look and consider Robinhood. And it was like trading at like $8. And I'm like, okay, you're right. Thank you for making me look at this. It's like, listen to your friends, guys. Don't necessarily buy, but take a look. If something you've written off is complete trash and you've not looked in a while, maybe it's a little bit different.
And it's just the reason I'm giving Tanner credit right here is that it's really hard to find good companies. Like, it's really hard. There's like maybe 50 good companies that are really worth investing for the next 5 to 10 years in a field of 8,000 of them. Like, realistically, that you can trust will be here in 5 years and actually outperform the S&P 500. So to find them is tough. And then to allocate heavy into them is tough. And then to believe in their future vision is also tough. But based on the earnings we got from all the hyperscalers, it seems like NVIDIA is going to keep crushing.
One of the great parts about investing is, like, whenever you find a really good name, and I got to continue to listen to Amit on this one, but like, sometimes people go, okay, well, you picked that really good stock, Amit. What's the next one? Yeah. It's like, I don't need another one. It's NVIDIA. It's still NVIDIA. Yeah. You know,
it is so quality over quantity.
Yeah. Yeah. It's and insane. You don't need especially, like, that's a great thing about compounding is you might hit the occasional 10x. I wouldn't bank on a lot of those in your lifetime. You may not hit any. You can still do very well, and you don't need a 10x every year to, have a really nice portfolio. You can have like this went up like 25% this year. Dude, that's great. I know that there's some years when the S&P 500 does like crazy things, but most of the time, 25% on any company over your lifetime, you're freaking rich if you do that consistently, time and time again.
Yeah.
It's not easy, but that's what we're trying to do. We are in the month of August. Last Friday, August 1st, we had a negative 1.6% day on the S&P. We largely recovered a decent chunk of that today. I don't know what August holds, but in general, if companies continue, wow, we recovered all of it. 1.52, and we're up another 0.2 after. So we literally recovered everything. If companies can just keep putting up earnings like this, then as long as the macro holds up with the labor market, inflation, rate cuts, then we might have a really, really strong end of year. But all we can control as investors is analyzing the earnings that we get. And so far, Robinhood, Palantir, Meta, Microsoft, these companies that put up incredible earnings. All right. That is it for us. Thank you all for being here. We'll be back next Monday, and we will keep going from there. I think NVIDIA is the next biggest earnings, and that'll happen towards the end of August. We have a bunch of other companies this week that we'll probably talk about next Monday, but maybe August 7th we get S&P 500. Tanner and I and Roy will try to figure out on like Wednesday, Thursday if it's confirmed. I'll try to use whatever sources I can to check, but it seems like Friday there'll be another shot. And,
so if the website doesn't go down, we'll figure it out.
Be careful with your covered calls.
Yeah.
Be careful with me tweeting during that day. You never know.
Yeah.
I might just come out and lie.
that was pretty funny. It was.
It's funny because Tanner didn't mean to like lie. He just like we had the wrong sources. Like it happened.
Yeah. I mean, it's almost everybody. Like Evan, just because he's naturally cautious, stock market news, and then myself because I've done that before. I got burned. People pushed back on a headline on Tesla, and I was like, "Yeah, I'm gonna verify first. I'll be slower." So, and now you're gonna do the same thing. You're gonna be cautious just because you're like, I don't know.
Yeah, no, dude, I've been real cautious. Yeah. Anyway, live and learn. I'll make more mistakes in the future, but hopefully at fewer increments.
We all do. Yep. That's the beauty
of
the market.
I appreciate the support. By the way, this is the greatest community of all time. This has been life-changing. And we'll do it again next week. I'm here.
Yeah. Thank you, everybody, for joining. It means the world. I will be live tomorrow at 7:55 because the content in chief is going on CNBC at 8 a.m. So I'll be starting an hour early to cover whatever the heck Trump's going to say. So, yeah, we'll be live in the market open tomorrow. We'll cover Trump. All right. Cool. Thank you, everybody. Everyone's Twitter and YouTube in the description. We'll see you guys next week. Bye, everybody.